Ladies and gentlemen, welcome back to another video. We're back on the MacBook. I'm not home, but the grind never stops, as you guys know. We're going to look at some SoFi options for tomorrow because the stock market was closed today. It's President's Day. I didn't know it was closed today until I logged into Robinhood today, and I was excited to potentially sell some call options on SoFi, but we have to wait till tomorrow. So I thought I could make a fun little video of going over both calls and puts that I could sell tomorrow, what I'm looking for in a call and a put. And maybe you can get inside my head that way. Hopefully, you're not too deep inside my head because then you might go crazy. But before we get started, if you like this kind of content, please consider subscribing. I've been documenting me trying to sell some options for some extra income. And if that sounds cool to you, hit that subscribe button so you don't miss any in the future. And also, if you're new to options in general and you want to learn the basics of selling options, I have a whole course here that will be linked in the description below. You can go check it out. I try to make it affordable and well worth your time. And I'm also adding content to this as it goes on, trying to provide more and more value over time. And even if you consider it much appreciated. And so I mentioned in a few videos, but I'll back up in case you're new here. I own quite a few shares of SoFi, and I've acquired these shares from either selling puts or just buying them outright a long time ago. And so if we look at my SoFi position as we speak, I have 3,337 shares. The average cost is 11.42. And I've been doing a combination lately of both selling puts and selling calls on SoFi. And this is what's known as the wheel strategy. So I can acquire shares from selling puts. And then once acquiring those shares, I can sell calls also on those SoFi shares. And the loop continues that way. And so I keep going back and forth to myself. I say, how many shares of SoFi am I actually good with holding long term? And I think a sweet spot for me right now is 3,000 shares. I don't personally like having a lot of money tied up into one particular stock. I like a well diversified portfolio. Selling options is just a subset of my entire investment portfolio. So putting a lot of money into one single company, especially this much, gives me a little bit of anxiety. And with that being said, what I can do to trim the amount of shares that I have from 300 to just 3,000 is by selling calls. Of course, this isn't guaranteed because selling calls doesn't mean I'm going to end up assigning those shares to someone else, but I can at least make money from holding on to these shares and try to make some extra income. So if we look at trading SoFi options, I go to sell a call. When I sell a call, I usually look at a chance of profit of around 80%. If you're wondering what that means, delta, because delta is not an exact percentage of it expiring worthless, delta here is 0.25. So once again, these $17 strike that we're looking at that expires this Friday, this is an 80% chance of the calls that I sell expiring completely worthless and I don't end up selling those shares. So maybe let's go out a week and I'm going to look at even more premium going out in time. And when I was looking before starting this video, I noticed the $17.50 strike. I can make $20 in premium from selling these calls. And it's 82% chance that these are going to expire worthless. And I'm not going to sell any shares of SoFi. And you might be saying, well, you just said that you would be okay with selling 300 shares of SoFi. And that's partially a lie, I guess, because really, I'm still partially torn between do I want to hold these shares and sell calls that are a lower chance of being assigned and just generate income that way? Or do I actually want to go closer to being in the money, get even more in premium? And thus, there's more of a chance of these shares being assigned. And then this is the dilemma when it comes to selling options is what I think is an adequate chance of profitability and an adequate premium might be different from what you think, which also might be different than what your friend thinks, which also might be different than what your wife's boyfriend thinks. But I'm saying that in 11 days, if SoFi were to be above 1750 a share, which there's an 18% chance that it's not, I'm okay with selling 100 shares. And because I'm okay with selling 100 shares, someone is paying me $20 to do that per 100 shares. So what I would do honestly is I would look at selling 3 of these. And so here we can sell 3 of these call options and make 60 bucks in premium that instantly hits my account. I can do whatever I want with that $60. And also if they get assigned, I can get some capital appreciation because I'm selling them for 17.50 a share. We saw earlier my average cost was 11.40 something, I think. And then let's go on the opposite. Let's say I want to acquire more shares because I'm crazy and I think 3,300 is not enough, which honestly, maybe it's not. I'm going to look at the same expiration date. And though maybe it's not the most optimal time to sell puts on SoFi because SoFi just spiked up on Friday, got some positive news about a new customer. And so I'm going to look at March 7th, which is 18 days out. And then this really comes down to, am I selling puts strictly for income or am I actually trying to make some income and acquire some shares? If I'm trying to make some income and potentially acquire shares, maybe I'll sell this 1550 because there's a 71% chance this expires worthless. And also the premium is pretty good. It's 45 bucks per contract. So if I sold just 3 of these alongside the 3 calls that I previously, we're looking at $206 in credit, which is hitting my account. Once again, I can do whatever I want with that as I please. But if I'm strictly just doing this for income, maybe I'll look at a higher percentage of expiring worthless, like this 82. And here I can get 18 bucks per contract, so it's quite a bit less, but the risk of these being assigned is also quite less. So I think if I personally were going to sell puts in my current situation, I would look at this $14.50 strike because I'm not really hurting and I'm not itching for more shares of SoFi. Rather, I'm just looking to make some extra income and generate premium from selling these puts. Which let me know what you guys think. Are you selling puts or calls on SoFi? Do you even care? If you want to go check out the course, like I said, it'll be linked down below. It's all the basics of covering everything you need to know about selling options. This is something I've been doing now for months and months, making an extra $2,000 or $3,000 a month. And thank you so much for watching. I hope to see you in a future video.